I want to talk to you about how to build your credit without a credit card. I mean, if you're trying to really build your credit this year, you've heard about a lot of strategies, a lot of ways, a lot of hacks. But the thing is that you got to really find the strategy that works for you, right? Because if you want to build your credit, if you want to build credit real fast, you got to really make sure that you don't build credit while also reducing your current FICO score. Because there are certain strategies that will dent your credit score, while others will help you actually build your credit score over time. Now, don't listen to folks telling you can actually gain 100, let's say, a score points, FICO points in 30 days. It's not gonna happen because building credit actually takes time. Okay, so let me give you a few facts here. So when you think about actually building your credit without a credit card, you have a lot of ways to actually get things done. The first way to build your credit without a credit card is through a credit builder loan. So a credit builder loan is pretty powerful. Why? Because it essentially allows you to lend yourself money. So in other words, this really sort of solidifies your budget discipline. Because if you are lending yourself money, you are basically actually relying on yourself to pay yourself. Like to have a certain discipline to make sure you do not actually miss any payment. So basically, when you think about a credit builder loan, you are thinking about an installment loan with fixed monthly payments. But what happens here is that things are a little twisted because instead of giving you the cash upfront, the lender deposits it into a savings account or certificate of deposit. So this is kind of cool because it allows you to actually build a certain nest egg, if you will. Okay, and so some banks withhold access to the account until you pay off the loan completely, while others will release some funds monthly if you are making on-time payments. And so the good thing about that is that you are showing a payment history, and the money will come back to you, and that's why it's a loan to yourself. Okay, so now one thing I have to say is that these loans often charge interest and an origination fee. So be sure you understand the total cost before actually getting one. Another way to build credit without a credit card this year is actually through a personal loan. So if you don't like credit cards, if you do not want to do anything with credit cards, and you want to build credit this year, think about personal loans. Now, when I speak about personal loans, you have all kinds of personal loans. You have payday loans. You have regular loans. You have loans from banks. You have loans from credit unions. You have loans from online lenders also. I mean, online lenders such as SoFi, such as Bluevine, such as Achieve. Like those are fintech. They are fintech institution, and their interest seem to be a little lower, and their application conditions seem to be a less strict than what you have when you go to banks. Okay, now personal loans, which can be secured or unsecured, allow you to borrow a large or small amount of money to use for anything. I mean, the use of loan proceeds is not really it's not really. I mean, some banks place restrictions on what you can use the cash for, but overall you can use the cash for anything. Now, the loan amount can be small or large. I mean, you have institutions that can lend you up to $100,000. So this is kind of cool. Institutions such as you have a Lightstream, a unit of choice, but you also have another player that I'm forgetting. I think SoFi. SoFi also lends you up to $100,000, and so does Wells Fargo. So, and then you have other players that will lend you 100, 200, even especially when it comes to payday loans, the amount is smaller. Okay. Now the thing is that the process is the same. You repay the loan in fixed installments over several years. Sometimes it can be all the way to 10 years, and the lender reports the balance and your ongoing payment activity to the credit bureau. So every month, a notification will be sent to Experian, Equifax, and TransUnion. So that will beef up your credit score over time when you maintain a history of like a positive history of payment. And with a low credit score or none at all, it can be difficult to qualify for a personal loan with a competitive interest rates. And so asking a trusted friend or a relative who has good credit to co-sign the loan could help you actually get approved and may lead to a better interest rates. And however, it's important to understand that the co-signer should be prepared to step up if you can't make a payment on time, since a late or missing payments affects their credits too. So they are in it. They're in it. They're actually in it at the same at the same level as you. If you are looking for a way to build credit without using a credit card this year, I want you to consider a car loan. Now, basically, of course, to get a car loan, you got to be in the market for car acquisition. In other words, you have to know how to drive, or you have to you have to really be in the market to acquire a car, either for yourself or for a family member. Okay. Now, a car loan is actually money you borrow from an auto dealer or third party lender to buy a car. So that third party lender can be an alternative lender, like a specialized lender. It can be a bank. It can be an online lender. It can be a credit union. It can be a lot of institutions. It can be any institution that actually can give you the cash. Okay, and usually a car loan requires a cash down payment, although that's not always the case. So depending upon the lender, you might have to put down, let's say, up to 20% when it comes to 20% down payment. Okay, and so with no credit history, you may want to add a cosigner to qualify for a better interest rates. Usually, car loans do come with like a relatively lower interest rates, because a car loan, when you think about it, is in essence a collateralized loan. It is because if something were to happen, if you don't actually make payments on the car loan, somebody will come. I mean, the lender will come and repo the car. Okay, so it's a collateralized loan. So because of that, the interest rate is lower. And when you think about a car loan, payments are part interest and part principal, and due on the same day every single month until the balance is repaid. Okay, so if you miss a payment, again, I just said this, but it's important to reiterate it. The lender may be able to repossess your car. It's kind of similar to a mortgage in this way, because the loan is secured by a physical assets. That's why the interest rate is relatively lower. And so, like other loans, the lender is responsible for reporting your car loan payments to the credit bureaus. And the good thing is, a history of on-time payments will boost your credit score. Maybe like when you start, not by that many points, but over time, you will see a bump in your credit score. That's for sure. If you are looking to build credit without using a credit card this year, I want you to think about a CD loan, a certificate of deposit loan, and this is kind of similar to a collateralized loan if you think about it, because a CD is actually an asset. It's a financial asset. It's not a physical asset like a car or a house, but it's still an asset. Okay, so a CD is like a savings account, except your money is locked up for up to 5 years. I mean, there are some institutions that have a CD. They have CD products for 3 months. Others go all the way to 5 years. And so when you have a CD loan, you have a good possibility of having a lower interest rates. Why? Because the money there is actually securing the loan itself. And so the thing is that the when you actually lock up the funds for up to 5 years, the trade-off is that you can earn more interest than you would keeping your cash in a traditional savings account. And you can always withdraw your money early, but you will have to pay a penalty. I mean, the penalty depends upon the institution, but it can go all the way to 1 or 2% actually. So a city loan is when you take out a loan and use the city as collateral. Okay, that means what? It means that you actually get a cash lump sum and then repay what you borrowed plus interest to the bank every single month. Okay, so you have this every single month, and this happens across the board. And so if you miss payments, the bank can take your CD and may even charge a penalty. Okay, so this is one of those things where you have to really be very careful here. And so using a CD secured personal loan to improve your credit score will work only if you make the payments in full and on time. So that you can build a history of accountability, a history of like let's say no default payments. And one thing I want to say here is that if you want to have a city loan, it's just better to get it from the same institution that you've been with for a while. Like it's just a lot better if you have an existing relationship with the bank or credit union or even fintech like online bank, neobank, so that you can actually parlay that good relationship into an even better relationship on the credit front. Another way to build credit without using a credit card this year is to actually apply for and receive a federal student loan. Okay. Now, when it comes to student loan, by the way, you also have private student loan, but here I want you to focus on actually applying for a federal student loan. So the U.S. government lends money to students to pay for undergraduate and graduate degrees and career certification programs. And you don't need a credit history actually to qualify. So if you are currently at 300, at a FICO score of 300, you can still qualify for a federal student loan, okay? And so unlike private student loans, there is no credit check to get most federal student loans. Instead, eligibility is based on citizenship, enrollment, and in some cases, financial need. So it can be a good avenue to start building credit early, especially if you find yourself like in the basement of the FICO score system, like you're currently around let's say a 300 or 350 or 325. Then you can go for the federal student loans. So on-time payments will boost your credit score, while late or missed payments will have a negative impact. This is kind of similar to a regular loan, by the way. The only thing is the U.S. government is your lender, really. So student loans can also help you improve your credit score by boosting your average account age and also diversify your credit mix, okay? And some student loans don't enter repayment until after the borrower leaves school, known as forbearance. So that's kind of cool because you are actually saving time. You are actually like saving time, but also making sure that you can organize your budget in a good way. So even if you're not actively making payments during forbearance, the loan will still show up on your credit report as being in good standing. So that's kind of cool because the fact that you're not making payments is not your fault, right? It's just an act of forbearance. It's actually a contractual sort of a clause that allows you to breathe a little bit before you start making payments. So that's really good from a budgetary point of view, from an affordability point of view. If you're looking for a great way to build credit without using a credit card this year, I want you to consider a P2P loan, a P2P loan, a peer-to-peer loan, okay? And so when you think about getting a personal loan, you have all kinds of alternatives. You can get a personal loan from a bank, get a personal loan from a credit union, get a personal loan from a neobank, like an online bank, a fintech, or you can go to a P2P platform. So P2P platform, peer-to-peer platform, help you borrow money from individuals rather than a bank or credit union. And investors lend money and earn profit from the interest you pay on the loan. So that's kind of cool because it allows you to get cash real fast from quote unquote people who look like you or live like you. Okay, so generally P2P lenders look for scores in the fair to excellent range, meaning 580 or above. Okay, so you will need some credit history to be eligible. So this is something to really keep in mind. And also, as the entire process is online and streamlined, you can get a loan in only a few days if you qualify. I mean, this is actually great compared to the 1 week. Sometimes you have 2 weeks if you were to go through a bank to get a loan. So another benefit that's really like another benefit besides speed when it comes to a P2P lenders is that P2P lenders perform only a soft inquiry to check your credit report. So you have the possibility to pre-qualify real fast. So because traditional lenders usually perform a hard inquiry that could ding your credit score. So if you're trying to build your credit score, if you're trying to really improve your FICO score, you do not want your score to be touched upon You don't want your score to be mingled with. Okay. Now, a downside of using P2P platforms is that they actually may send your account to collections more quickly than a traditional lender if you happen to miss the payment. So it's one of those things where when you think about a P2P platform, think about a decentralized hub for lending, and basically they do not really play games. Let me just put it that way. They do not play games, and they're very risk averse. So I just share with you the top six ways to build credit without using a credit card this year. Let me give you a few generalities before we close to this conversation. When you think about the building credit without using a credit card, you do have other options actually. You can actually piggyback on someone else's good credit. You can also report rent and utility payments to the bureaus. So you can also report recurring bills to the bureaus, and you can also pay your bills on time, right? So when I speak about actually piggybacking on somebody else's good credit, many credit card companies allow cardholders to add authorized users to their accounts. So as an authorized user, you may get a card to use for purchases, but the primary account holder is ultimately responsible for making payments. The potential benefit to you, assuming the primary account holder is a responsible borrower, is that their credit account will show up on your credit report along with the payment activity. But not all lenders actually report authorized users to the credit bureaus, so make sure this is an option before entangling with another borrower. Also, you can think about reporting rent and utility payments to the bureaus. The three major credit bureaus do not require rental or utility payment activity to be reported by landlords and property managers, but they'll welcome the information when it's submitted. So if you pay your rent and utility bills on time, consider asking your landlord whether they can report your payments to the credit bureaus, or you can do it yourself too. So a service such as Experian Boost will take care of the details for you, and some services will even report the last 2 years of positive payment history. So that's really good from from a flexibility point of view. In terms of reporting recurring bills to the bureaus, this is also another possibility. So reporting recurring payments such as streaming subscriptions and cell phone plans, by the way, are another way you may be able to prove reliable bill pay. So various online services, including one offered directly by the credit bureau Experian, let you connect the bank accounts you use to pay your recurring bills and then report those with positive history payment to all three, to some or even all three of the credit bureaus. So if you think about the ways to build credit without using a credit card, you do have a lot of possibilities, but you have to choose the one that works for you. You have to understand that, not all will work for you, especially when it comes to the type of credit building capability you choose. But no matter what, remember that you always have to pay bills on time. The most important factor when it comes to building good credit is debt payment history, accounting for 35% of your FICO score. So basically, making full on-time payments on every loan or line of credit is actually imperative to maintaining good credit or even strong credit, by the way. So this is important. This is actually important from a budgetary point of view, but also from a FICO score point of view. In closing, in today's conversation, I spoke to you about the top 6 ways to build credit without using a credit card. So I give you the facts, the generalities, and now the closing arguments. So the facts: you have credit builder loan, personal loan, car loan, city loan, federal student loan, peer-to-peer loan. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.